There is a lot of chatter going on social media about the Canadian real estate market and how it's going to crash in 2025. And some people are predicting the prices will go back to 2014 level. And I was like, okay, this is possible, but what is the probability? As you know, that there is no certainties, but only probabilities. So in this video, we're going to do a deep dive into the Canadian real estate market as we step into 2025. We will discuss everything from rising unemployment and household debt to fiscal deficits and immigration caps, and how all these factors affect condos, single-family homes, and the rental market. Stick around. This is a must-watch if you're looking to buy, sell, or invest in Canadian real estate market. Let's start by understanding the big picture. Canada's economy is going through a bumpy ride in 2025. And it is shaping up the real estate market in some interesting ways. The unemployment rate has climbed up to 6.8%, and according to RBC, it's going to hit 7% very soon. And here's why that matters a lot. Higher unemployment means fewer people feel financially secure enough to buy a home. It also increases the chances of mortgage defaults and forced sales, especially for homeowners renewing mortgages at a higher rate. This economic uncertainty is creating a wait-and-see attitude among buyers, slowing down the demand. Canadians are carrying a record level of debt, averaging 185% of the disposable income, which means every $1 that they earn, they owe $1.85 back to the lender. With interest rates elevated, debt repayment is eating into disposable incomes, leaving less room for mortgage payments. Many households stretch thin, which could trigger more listings as homeowners struggle to keep up with the cost. But again, this applies to the leveraged investors. If you have 1, 2, 3, 4, 5 properties and those properties are producing negative cash flow, then of course you will dump those properties in the market to get rid of them. But if you are a homeowner and you only own one property, you will do everything possible in this world to keep that property because that is your shelter, not an investment. Federal government is running a $62 billion deficit, while provinces like Ontario and BC are also posting large deficits. Does this matter? Deficits often lead to higher taxes, reduced spending, or inflationary pressures, all of which make housing affordability even worse. Over the past few quarters, GDP per capita has been shrinking, indicating slower economic growth on a per-person basis. This signals weaker productivity and declining standards of living, which impacts buyer confidence and housing affordability. Canada's recent decision to limit immigration, including caps on international students, could significantly cool down housing demand, especially in the rental markets near colleges and universities. Over the past decade, immigration fueled much of the housing boom. With slower population growth ahead, we could see softer demand, particularly for the condos. These economic factors set the stage for what's happening in key markets like GTA. Let's zoom in on the trends there. If you have been following real estate in GTA, you will know it's always full of surprises. But 2025 feels like we are watching two completely different movies. One for single-family homes and the other for condos. Tight supply, rising prices in the single-family home segment, we are witnessing a supply crunch like never before. Housing starts for detached homes have dropped sharply, especially in the suburban areas like Markham and Mississauga. Builders are pulling back due to high construction cost and cautious buyer sentiment. Despite these challenges, the price for the single-family home is kind of stable. And in my opinion, it's going to stay stable because of all those issues that I just highlighted. Some of the experts are predicting 5 to 7% price rise in 2025. But affordability remains a key concern. Rising interest rate and stricter lending rules are making it harder for the first-time buyers to enter into the market. This has pushed some buyers to look further out, boosting demand in surrounding areas like Hamilton and Barrie. And now let's switch gears to condos. A completely different story. The GTA is seeing a flood of new condo supply, especially in the pre-construction projects. Nearly 40,000 new units are expected to hit in the market in 2025, and developers are facing slower sales. Investors who were once the backbone of the condo market are now hesitant. High borrowing cost and stagnant rental growth have made condos less attractive for generating returns. As a result, prices in the condo segment are under pressure. and buyers are starting to negotiate harder. However, the rental market for condo could still offer opportunities. While rents may cool in university districts due to the immigration caps, demand in urban centers could remain stable as affordability challenge push buyers to rent instead of buy. A looming issue in the mortgage renewal cliff in 2025 and 2026. Many homeowners who locked in ultra low rates 5 years ago are now facing renewals at much higher rates. Fixed mortgage rates, which are influenced by the bond market, have risen to around 4.14% as per VOA, while variable rates remain at 4.30%. This will hit household budgets hard, potentially increasing mortgage delinquencies and forcing homeowners to sell. Again, this is very much applicable on the leverage investors who are carrying multiple properties and not able to keep up with the cash flow. But for a single homeowner who only owns one property, they will do everything possible to keep their property and not willing to dump that in the market. For buyers, higher rates mean reduced borrowing power, which could limit supply growth even further. Recent immigration caps, particularly on international students, are expected to hit university and college towns hard. Over the last 3 years, these areas saw a sharp rental growth fueled by student demand. But with fewer newcomers, demand is expected to drop, leading to high vacancies and slower rental growth. For investors, this is a double-edged sword. Those who bought properties banking on high rental income may struggle to find tenants, impacting their cash flow. Builders, too, are likely to pause or delay new rental-focused projects due to the reduced demand. While this might temporarily improve affordability for renters, it could also lead to longer-term supply shortages if developers scale back future projects. So what does all this mean for the Canadian real estate market? In single-family homes, prices may rise in the short term due to the low supply, but affordability concerns will persist. Buyers may continue migrating to suburban areas to find deals. In condos, oversupply, especially in pre-construction, could put downward pressure on the prices and sales. Investors will likely wait for better rental growth before re-entering into the market. In rental, declining demand in student-heavy areas could cool rental prices, but this might also discourage builders from starting new projects, tightening future supply. In mortgage renewals, higher renewal rates will put financial strain on existing homeowners, potentially leading to forced sales only for the speculative buyers and more inventory on the market. The direction of interest rates, job recovery, and immigration policies will ultimately determine whether the market stabilizes or faces further turbulence. In summary, 2025 is shaping up to be a year of transition for Canadian real estate market. Rising rates, immigration caps, and oversupply in condos contrast with supply shortages and price resilience in the single-family homes. For buyers, sellers, and investors, staying informed and adapting to challenging conditions will be the key. Anyway, if you like this video, give me a thumbs up and subscribe and put your comments down below. I'm interested to see your feedback, your opinion about the market conditions and how you see the market is evolving. Let me know in the comment section and I'll see you in my next video. Take care. Financial education is very important for everybody, especially for the kids who are still at school, because when they grow up and go into their professional lives, if they don't know how to manage their finances, that is going to be a disaster to begin with. I have just published an ebook for the kids aging between 10 and 16 years to understand how they can manage their finances. So when they grow up, they know exactly how to manage their personal finances, because I have broken it down at a very, very basic level. What is money? How can we save? How can we invest? What is debt? How can we use debt? What is credit card? And how we can set ourselves for the financial future when we go into our professional life. So if you are a parent looking for a very simple to use ebook for your kids, click the link below to order the copy for your kids and let me know what you think about that. Let's get back to the video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.